What is up, y'all? Welcome back to another episode of the Easy Button Real Estate Podcast here with Tucker, Merrihew, and myself. We've been off the mic for a few weeks, mostly my fault. In mid-April, we welcomed our first kid, a little girl, Charlotte, we call Charlie, which has been incredible. So obviously getting kind of broken in and getting in the rhythm of things with it being our first and, learning about all the things that you think are catastrophic that actually aren't and getting in a functional routine. So that's really the update on mine is just, it's been the first 2 weeks of that. We're kind of just, I have a buddy just had a kid last week too. And I was like, yeah, the first 2 weeks are kind of just survival. You just kind of try to make it to the next day and then the day after that, but kind of settled down now and, back in the swing of things, back in the office. So that is all good. And obviously I know Tucker updated us in our company chat this morning that he's making a lot of progress with his $5-6 million spec home he's building right now in Naples. So what are the updates there, Tucker? What's going on in your world?
We're moving ahead pretty good. Obviously, you had a baby, so we had to stay off the microphone. I had some surgery on my face, so I wouldn't have been a very pretty addition to the show. Obviously, I'm still not. I got a grizzly beard that'll all cut here eventually as everything heals up on the left side of my face. But we're making progress on that house finally. It's been back and forth. I got the window and door provider. They're like, "Are you ever going to take these windows out of our warehouse?" Like literally they call me every other day. I'm like, "Yes, trust me, I want to." But we had some issues this last week again, and you're earning or you're learning, or hopefully you're doing both. And so we're doing a lot of learning on this, and hopefully we'll do a lot of earning when it's over. But I'm happy to be kind of making some let's call it extreme progress here over the last few days as we've kind of got all our framing done, and we're framing up the second floor today, which obviously I post a lot of pictures in our company chat. And we build block houses, so most of it's block, and then some of it, the interior framing is wood, and then the second floor, a chunk of that is block, and then some of that is wood. So it's kind of a combination of subs. You got to go back and forth. It's not like in the Northwest where you just have your framers out there and they frame the whole house. It's much different than that. You got block, you got concrete, you got concrete beams you got to pour, you got wood framing you got to do. So a little more involved construction wise as far as that goes, but we're making progress, man. We're getting closer and closer. I wish the market was a little better, as we kind of continue forward with this, but we've got enough time left before we finish that I'm hopeful that maybe the Strait of Hormuz will open again someday. It's still closed. Even I think the last show we did a couple months ago or a month ago, we were like, it might open back up. Nope, still closed. So that worries me a little bit still at this point, along with all the money that we've spent over there, and a variety of other things. But I'm just hoping that the market gets a little better and that we can get the 10-year bond to kind of quit going through the roof, which I think is put some apprehension on a lot of buyers in the market right now in terms of which way the market's going to go, which way interest rates are going to go. And if interest rates continue to push up, then that may continue to push the prices of, the underlying asset that it finances, which is real estate, down. So you've kind of got this really weird influx period right now. And then on top of that, you get crazy, AI companies that are pulling up the Dow to all-time highs, but yet consumer confidence is essentially at all-time lows. So you have a very strange disparity in the market right now, and it makes it tough to read the tea leaves, that's for sure.
Yeah, this morning too, Iran blew up the airport in Kuwait. I don't know if you saw that. It's like 60 people injured, one was killed, like blew it up, international airport in Kuwait, which was a major escalation too. So it's funky right now. We're back doing a good amount of deals. Put a couple contracts on the board in the last month that are higher in Bellevue, and I sold the deal 2 weeks ago to Jimmy actually, and Clyde Hill for $3 million, his acquisition on it. And I think literally 5-6 months ago, I would have made like a $400,000 fee on that deal, and obviously much less than that with where the market's at right now. Ended up being sub 100. But it's just weird. And there's a lot of people sitting on inventory. There's a lot of builders that are tightening their purse strings. I know like Greg Lynch, for example, he's got 30 units coming to market in Washington that are wrapping up. And I think a lot of people are making the decision of just liquidating, whatever it takes to liquidate to get, the capital back to redeploy to recoup on the other end as the market eventually. So again, it's a cycle, and it eventually, so again, talking to Jimmy late last night. He's like, yeah, I'm just gonna just gotta stay in the game. You stay in the game and you catch both sides of it, and it all pencils out. I think a lot of people don't think about it that way, but it is definitely weird out there. Still a lot of deals happening. Obviously we have a big client book and we hear the success stories every single day. So by no means is it like a sob story. There's no deals to go around. In fact, I think actually seller psychology's loosening a bit. And you just get them steeper, you can still move them. But yeah, it's weird. So is that high end that, let's say you guys finish the build and you want, your number on it that you really want's 5.5 or whatever, and you get an offer for 5.1. Is it something that you might sit on a little bit once it's done until the market bounces back a little bit, or how do you think about that?
I don't know. I'm gonna delay listing it. Like, how some guys list stuff early, especially with new construction. Flip stuff, virtually never, because it's just too much of a pain in the butt to deal with buyers on a flip. And you got to justify your profit margins a lot more in that than you do with new construction. But I'm gonna resist listing the property at all until we're completely done with it. So that buys us the most amount of time to kind of correct the market. But that's about all we can do. I mean, I'll assess the market at that moment in time. I mean, I've always been pretty good at like, okay, what is the market like right now at the point in time where we start to list something? Because that once you start listing it, then you're on the clock, right? You put your price on it, you put it out there. If you don't get that price in the first couple of weeks, you're probably not getting that price usually. In this market, I would say you're definitely not getting that price, at least in Southwest Florida. So like, if it goes pending the first couple of weeks, good for you. That means you priced it right. It was a great property. But if you don't get it in the first couple of weeks, you're probably not. So I'm pretty realistic about how we price stuff, which ultimately, to answer your question, would mean that I'm pretty realistic about what I think something should sell for at the, moment in time that we're finished with it and we put it on the market.
Yeah.
Obviously it doesn't mean I bet 1,000. I've missed the mark a couple of times. But usually in a much more kind of up and down market and not, like the Northwest was pretty simple for the most part. Like even when it slowed down, here it's a little more radical in terms of the ups and the downs, but I think I got a pretty good handle on it. We've actually got another house that, I'm just waiting to start as well. I bought the property a while ago, but I've just been waiting to tear the house down, and we've got plans ready to go. And it's a little more expensive one too. It's probably $3 to $4 million house. Or at least what it would be when it's finished. And I'm just kind of dragging my feet. I let the renters stay in there for a few more months, and then I'll kind of reassess at that point. But kind of like you said, some of the people that we know that are reloading, I know when they reload, they're not going to be like super over the handlebars to just go buy everything and anything, right? They're going to be probably a little bit careful in terms of like how they get back into the market and make sure that, as they get back in, hopefully they're getting back in and they actually realize some of the upswing, or at least they don't get punished by any more of the downswing, right? For the most part. Some of the machines are so big, they just have to keep buying and do stuff, right? And, my machine was that big for a long time. I'm fortunate enough now as we kind of rebuilt this thing, I'm not forced to build a huge number of units or flip a huge number of units in order to sustain the machine that has a forever appetite, right? So it gives me a little more flexibility, and obviously working in higher end price points and having just kind of a simpler overall business allows me that flexibility also. But it's a good place to be in times like this when the market's going gangbusters and everybody's making money hand over fist. It's great to be on the side where you got a big machine and you're doing lots of units. So
Sometimes.
give and take. I mean, you're obviously there's more friction, more bullshit, more headache. But at the end of the day, ideally, hopefully you make more money too. And it's worth it. Sometimes it is, sometimes it isn't. But
People don't, though. Most people even if they run, even in a hot market and they're doing a ton of deals, oftentimes it's still what they actually like. What's net is brutal a lot of the time. Like
yeah. I mean, when the machine gets big enough and you got enough people that you take care of, and expenditures that you have every month, it can be stressful, right? Especially in a time when you're like, I don't know what these projects that are on the books are actually going to yield for the company, right? In a hot market, we were talking about Jimmy, right? He's got a pretty big amount of inventory that he's in the process of selling. In a hot market, like you can look at that, book of inventory, be like, okay, bare minimum, we get this for this, this for this, this for this, this for this. It's a pretty easy calculation of profitability. In a slow and apprehensive type market, at least for the buyers, retail buyers, you can look at these projects and it's really hard to like quantify like what is this going to make for the company collectively, or any given one of them actually. So it's a tough time for for everybody as we kind of navigate through this. I'm just hopeful as we get towards the end of the year, hopefully things settle down politically, geopolitically, and hopefully we can find a way to push interest rates down. I don't know how that's going to be possible with all the money we've spent on this. I guess we can't call it a war, this conflict, but we'll see.
Yeah.
We'll see.
Yeah, all good points. I think one of the topics that we have to talk about today, can't really clean around the bush on. I put a newsletter out about this. I've talked about it on Twitter. Is Mr. Beardy Brandon?
Oh, yes. It's been a rough week for him online.
And obviously, we've been chatting offline about the Heat, and I if you guys don't know, he had a syndication, go south where it was a total loss, and was able to recoup some capital. And this is all information from him, and then information I also gathered because he went on Pace Morby's Facebook group live with a couple hundred people and kind of told the whole story, which was interesting in of itself. But yeah, so they lost about $15 million in investor capital. A lot of the investors that lost their capital were Class B investors who were kind of second at the deal for smaller check sizes. He was able to get some of the money back for some of the larger ones. And I think that, one, syndicators, sometimes deals go bad. I met at a buddy's birthday party in Newport Beach, this guy that had made all of his money in tech, and now he ran a syndication. He's already done 40 deals, big deals, and done a great job. And still was, doing cap calls in one deal. They probably won't lose the deal, but it was still in a tough place. And I think to me, the biggest lesson from the situation I've learned, and I put this out, that, I don't think this was, fraud or anything intentional. I think it was just, a big mistake and an example of, I think, the pros and cons of social media, because he raised all this money from his social media, which the pros of that is much easier to raise. And if it goes well, it goes well. The cons are, if it doesn't go well and you're bragging about, working 1 hour per day and, bragging about, this and that online, it can put you in a spot where you can permanently damage your reputation. I think he's in that spot. It's kind of a reached escape velocity in regards to his brand where, I think if he went and tried to raise money again from social media, it would become a thing. And I don't know. I believe there's still more to come. I know a certain part of the investors are putting together a class to try to go after him more. Who knows if it gets big enough, and SEC or other agencies look into it, because it was so internet based. But yeah, Tucker, I want your opinion on this. You've been around a long time too, and I think everyone I talked to when he was doing that, everyone kind of saw the writing on the wall. Like, this is a game that either goes really, really, really well or really, really, really bad, and there's no real middle ground option for it. From the conversation that I've had.
Yeah, I was actually talking to Trevor Mock about this last week too, along with you. We were kind of chatting offline once I kind of heard about it. And to be fair, I had another conversation with a guy here locally that he's good friends with a guy that was in the Collective Genius, did a lot of financing for a lot of those guys there. And they had some absolute dog shit deals explode too, right? So it does happen. So I'll preface it with that. Number two is, we obviously both know Brandon. We've known him for a long time. I would never say that he was like a bad dude or anything like that. He was, kind of just a typical nice guy, maybe a little too religious for me, on that end of it, but that's his prerogative. He can be whatever he wants, right? But other than that, I don't have anything really, nothing funky about him. He had some big audacious goals, right? Or big, hairy, audacious goals. Isn't that the acronym? But
Yeah.
the market was kind of crazy when he started, that whole adventure where he was going to leave BP and he was going to use the celebrity that, that created for him, and use that celebrity to raise money to jump into these massive deals very quickly, right? And so, the fact of the matter is that he was, a low level to mid level, single family, maybe small plex kind of investor that jumped way up the ladder to these huge projects. And his celebrity allowed him to do that, right? In terms of being able to generate the capital raises to do that. The normal real estate ladder for the let's call them real estate celebrities or have online, personas that can help raise money, you got to climb that ladder slower, right? It's a slower progression. And with that slower progression, you have, you got wins, you got losses. The wins are not as big, the losses aren't as big. And you kind of become a better investor as you kind of move up that ladder. And I think anytime you skip a bunch of rungs, whether it be because you have celebrity that you can leverage, or whether that be because somebody enables you to do that, because they want, for whatever reason, their desires match up with yours. Anytime you skip a number of rungs, there's huge potential for a massive implosion, right? And I've seen that happen in the single family world. Back in Portland, there was a guy that he tried to do what we did on steroids, which he tried to basically do high end flips, but do like a massive amount of them. And he went from a guy that was basically renovating low end single family to trying to do this massive amount and raised all this money. He got run out of Portland because he lost people a ton of money, right? But he skipped a lot of rungs on the ladder too. Now, beyond that, I don't think the Brandon's a bad guy, like I said, but if you do that, you put yourself in front of a moving train at a certain point, right? And the other thing that everybody should have recognized, and hindsight's always 2020, and it's just like, in 2008 when things started to collapse, and we look back and we go, God, that was really fucking stupid. We should have all seen that coming like way earlier than it did. But back in 2020, 2021, beginning of 2022, interest rates were so low that obviously it affected the single family market. But when you get into commercial multifamily, I mean, it's not emotional purchases. It's based purely on math. And part of that math is, what is the cost of debt to carry this or any given property? And that factors into the cap rate that things sell at. And so to, go into those massive deals and just think that, okay, I can go into it with variable or balloon debt, when we're taking that debt out initially at an extremely low interest rate, and not factor in, the potential of major upward movements in rates, before that time period is up, or when you need to re-up the financing or pay off the balloon or refinance it. I just think that's really naive of people. And from what I've read, that seems to be the thing that everybody, including himself, that was in that deal was okay with, which means he probably shouldn't have skipped those rungs. And all those people that believed in him also didn't have enough experience to truly understand what the risk was in doing that. And so you kind of get a situation where it's a little bit of the blind leading the blind, right? I mean, obviously he's got a lot of desire to grow this company and be this big, huge asset holding conglomerate, but you skip a lot of rungs on the ladder, whether as an investor or as the principal, or the sponsor or the syndicator, whatever it is. It's a blind leading the blind situation sometimes, and it does happen in real estate. Things get crash and burn in real estate. I mean, we've seen it a lot. I mean, we have a mutual friend that he went too big and he ended up killing himself, right? So, it happens all the time. And he was a smart guy. We both knew him very well. He was a super intelligent guy. So it's not like you have to be a dummy for that to happen, or a bad guy. It can happen to everybody. And so that's why I think it's really important to not, try and speed up the process of learning this game and learning the asset classes within real estate that you invest in, especially when you start raising large and larger amounts of money for these bigger projects that are harder to get in and out of and harder to replace the financing with.
Yeah, I think it's a test of, just because you can do something doesn't mean you should. And I think in a hot market when everything is great, there's becomes this like general perception that you should go as big as possible. And you like the whole last time the market was higher, that all the Grand Carco and like 10x everything, right? 10x everything. You want to buy 1,000 units, how can you buy 10,000? You want to make $1 million, how can you make 10? I think what it does is one also, like, for most people, like, okay, let's say going 1 million times bigger takes you from, hey, you can make $2 million, you can make $20 million or $15 million. Like, I think that what most people want for their life can be achieved at $2-3 million in income. Like, which is also already insane. Statistically, almost no one gets there. And you look at the guys that do run syndications the right way, a lot of them have been doing it for 20 years, 30 years, 15 years, and they've been in and out of 40 deals, and they still won't touch like general audience money because of what comes with that, the expectation and the lower sophistication of investor in your deals. Yeah, maybe legally you're not obligated to, it's still them making the decision. At the same time, you're the steward of a lot of times someone's life savings. They're giving you 50, 75 grand that they're hoping to turn into 105 over a 2-year period, and it just disappears. And the downstream effect of that, I'd have a hard time sleeping at night after all that. So again, I don't think it's Brand. I don't think Brand's a bad dude. I think that it's a lesson in diversification of focus, because I think he would even say he had a really good thing going with the podcast, with buying some deals himself, with everything that was happening, to then, hey, I'm going to go take over the world. And there's more deals. These are a lot more deals, and hopefully they turn out the other way. But if you structure other deals the same way you structured this deal, I'd be in crisis mode, trying to do whatever I could to salvage it, because one is whatever. If it gets to 2 or 3 or 4, all of a sudden it becomes it can be a real career ender in a lot of ways. So yeah, it's a good lesson too, of like Tucker's saying, if you're wholesaling right now, you listen to this, or you're flipping right now, you listen to this. If you want to build, like we have a client who's like, hey, cool, he had a wholesale and flip shop. He's like, hey, I'm buying this lot. I'm going to build a 20-unit apartment complex on it from the ground up. And I'm like, well, why not start with like building a house, right? Or start with building a duplex. And for me, like I that's how I think about it, at least. Like I understand that the urge to make money and make it quick, but at the same time, you have to look at the risk reward, and there's so much risk you take on by leveraging, especially other people's money. When you add that to the mix, I just don't personally believe that most people should go there unless they've done dozens and dozens of deals themselves.
Well, there's also the time in the seat, right? Of running money, I call it. And, I feel like my opinion here is valid, because I've been running millions of dollars of other people's money for almost 20 years now. And there is not one person that's ever lost $1 or has ever not gotten the full return that I told them that they'd get in that entire time. Right. And so to me, that's super important. But I also know that, the more money I take on and the more stuff that I do with that money that I don't know inside out and backwards, the higher the risk is of that track record not being the track record moving forward. Yeah. Right. And so you really have to be real with yourself about, should I be taking on all this money and be the shepherd of it, at this point for this type of deal. And, a lot of people want to beat their chest and say they're smart and they can do whatever. And, good for them if they can. But the reality is that sometimes you just don't know what you don't know. And, if you skip too many rungs on that ladder, especially on the capital ladder, because the more money you can get access to, it allows you to do a lot more, bigger projects that you would have never done naturally. Right. And that's where the celebrity factor comes in. And if there's any sort of like, suit against them or things like that, I can see the powers that be coming in and saying, hey, if you utilize your online celebrity to raise money, that could be a problem, or at least we have to put you through a higher level of scrutiny, because are you an online influencer? Are you an online personality? Or are you like truly like an amazing, great operator as an investor? And the likelihood of the latter being true is probably slim in comparison to you just being a big, popular personality to many, online.
I think everyone's got to play the game for, like, I think so many people build something not for themselves. They get involved in the vanity metrics of unit count and revenue and employee size, and, the dick measuring contest of business. And, I think I went through that when I was in my early 20s. And I think you realize a lot of times the hard way that I never even stopped to ask myself the question until a few years ago, like, what do I want? Like, what do I want my life to actually look like work-wise?
It's a good question, and a lot of people don't stop and
I had an 8,000 square foot office here in San Diego, and like we were trying to do the take over the world thing, and I sat there one day at the conference room with a buddy, that wasn't tied to my business, and I was like, you know what? I actually don't even want any of this, really. Like, I want to be in business. I love building a team. I love business, but doing it in a way that is you can make more mistakes and have less downside for those mistakes. Right? Like right now, I can make a mistake and it's not catastrophic because I don't have fixed expense with an office of 15 grand a month.
Oh, it's a marathon. It's not a sprint, right? At the end of the day, that's what it comes down to. So it's like, and that's the beautiful thing about real estate is you don't have to. There's no like age where you have to retire, right? So it's like if you just keep getting better and better at real estate every year, chances are, I mean, you're going to have some years that are you make less than other years, but it's really market dependent. It's not skill dependent, right? So generally, your earning potential is going to continue to go like this over time, and your ability to learn how to keep the money you do make is going to continue to go like this over time. So, yeah, you can get to that point that you're like, what do you really need in your life, and well beyond that, without skipping all those rungs in the ladder and trying to just 10x everything overnight, right? Um, which I get it. I get the ambition. I do. I mean, I get it more than anybody. But now at 46, like I also understand what can happen, and it's not guaranteed to happen to everybody by any means, but it can happen. Like if you skip that many rungs and you're enabled to do that for whatever reason, it can end just as bad as it can end really good, right? And it's a possibility. And you have to go into that, eyes wide open, knowing that that's a possibility as well. And most people don't do that. They just see the rosy, great side of it, and then the beat your chest and, tell everybody online, how great you are. So,
which the people that they're trying to impress, kind of last point I'm moving to the outro, is like actual like people that are doing like legit stuff that have built a real business that have made money, like aren't impressed by that stuff. You know what I mean? Like I was with a buddy of mine like a week ago. We were golfing and someone pulled up in like I don't know, a Bentley or a Rolls Royce Cullinan or something. It's like, holy shit. I'm like, that literally costs like $4,000 a month to lease. Like that's, you know what I mean? Like that's not the, it's the guy that like is in, it's silent. Like you don't really know if someone's really doing that thing, doing the thing. Like they don't, like those are the people you want to impress. And the way you do that is not by, watches and cars and posting how many people I've seen on Instagram, like they'll sit in first class and they take a little screenshot, the little photo of like themselves on their legs.
Congratulations, first class. Yeah.
Like, okay, you got some airline miles on your company credit card and that kind of shit. I'm just like, what are we doing?
I mean, I did send you guys a picture. I flew in a little prop plane to Key West.
You sent it with the company chat though. You're not.
Yeah. But it wasn't. It was slightly more expensive than a first class ticket for each person flying a little prop.
Yeah,
it was only a half-hour flight.
Air things, but also like you're not trying to flex on people. Like, hey, come buy my XYZ. Look at my, first class seat and my whatever. So, that kind of stuff pisses me off now because it's just you're impressing dweebs with that. Don't what does that do for you? Nonetheless, I digress. Good show today. I thank you guys for hanging out with us for the past 30 minutes, and I think we hit on some important topics. Again, we talk about, I wanted to talk about the brand situation because it's a real-time situation, and I think there's a lot of lessons to be learned there. And also, I made plenty of failures in my career, and I'm sure you'll bounce back, and I'm sure that one day it'll all be a learning lesson for him and other people about how to use social media and what it looks like to truly build around that. So as always, please, you guys leave us a like or review. Let me know what you want to see on the show. We're back. We're going to be back more frequent after a little hiatus with, again, the new kid on my end and adult Tucker has stuff going on his end as well. But we are back. And if you guys are listening to this, we are throwing an event at the end of July in San Diego. Probably 30 to 50 and high-level investors for a weekend hanging out, mastermind in a hotel conference room, doing fun dinners and things. So definitely, if you want to hear more about that, go to easybuttonrealestate.com/live, and you can see dates, buy a ticket, and learn more there. So until next time, you're only one deal away.